broadcast will be starting in 3, 2, 1.
Hi everyone, good evening. We're so sorry for the delay due to some technical issues. So welcome to tonight's webinar, which is Go After the January Crash, Can the Bull Run Recover? So my name is Ivy and I'll be your host tonight. Before we start, I just want to do a quick check if you could hear me and see my slide. If you could, maybe can drop a 1 in the chat box. Okay, great. Thanks, everyone. So there will be no video recording of this session. And if you're interested to rewatch this webinar after that, you can always visit our YouTube channel, Philip Capitals and Diriam Berhad, as we upload our recorded webinars there. Okay, so here's a little disclaimer for whatever we share tonight is just for general information and educational purposes. So it does not constitute to any recommendation to buy or sell any investment products. So a little background about our company. So our company is called Philip Capitals and Diriam Berhad. We are incorporated in the year 1995. So our company has been for over 30 years now, and we are a wholly owned subsidiary of Philip Capitals Holdings and Diriam Berhad. And some of you may previously know that we were formerly known as Philip Futures, but as we grew and expanded our offerings and services, we have since renamed ourselves as Philip Capital. So apart from that, we are also trading participants of Bursa Malaysia derivatives, participating organization of Bursa Malaysia Securities Berhad, and also a holder of Capital Market Services license, which basically means that we're legal and regulated brokers in Malaysia. So Philip Capital have office across Malaysia. Our mother company is actually from Singapore, but our HQ is based in KL. And we have total of 11 branches, which we call ourselves as Philip Investor Centers, as you can see in the slides, in both East and West Malaysia. So if you're from any of these cities, you are always welcome to drop by our branch and inquire about investment-related services. And this slide shows the Bursa Excellence Award that we have gotten. And we are very honored to be awarded as champions for Best Derivatives Trading Participant and second runner-up for Best Overall Derivatives Trading Participants. So thank you to all our clients because we couldn't have done it without you. So Philip Capital, we have a wide global network. We have offices in 15 different countries as located in the map. So as such, we do serve an international client base. We also provide products listed in global exchange from the US, like popular exchange like CME, CBOT, COMEX, NYMEX, NYSE, and NASDAQ. So we also have exchange from Europe, Japan, Hong Kong, Singapore, Australia, and also Malaysia. So with our global coverage, clients can trade both local and foreign products with us. So we are the one-stop solution for your trading. Okay, now onto our products. So we offer 3 main categories. The first one is future, which includes diverse markets like index futures, agriculture futures, metal, energy, and cryptocurrency futures. So the next one is equities or stocks. So you can trade Malaysia shares, US shares, Hong Kong shares, Singapore and Australian shares with us. And for the third one is contract for difference, which also known as CFD. So we offer local Bursa shares and also US CFDs. So if you're someone who likes to take advantage when the market is going down, derivative products such as futures is actually a great choice because you can short the market and potentially make a profit. So essentially it means that you can trade both ways when the market goes up and when the market goes down. So if you're interested, do let us know and we will contact you accordingly. Okay, so why choose us as your broker? So first, we are an award-winning multi-asset broker. We are well established and also recognized in the market. Secondly, we offer 24 hours broking and executional support. So if you have any issues regarding your trades or your accounts, you can always call in our dealing desk and we have dealers ready to assist you. So the third one is that we provide advisory services on products that you would like to trade or how you can get started, and we send out latest market news to our clients on a daily basis, so you can be sure to get the latest updates. And as mentioned earlier, our clients can trade a wide array of product through our platform. And lastly, there are no platform fees, so you'll be able to access our platform if you have an account with us. So for the coaching session, right, it's actually more tailored for beginners who want some guidance on these topics like how to start trading, about the product knowledge, platform and charting system. So if you're interested, we are more than happy to assist you. We also conduct these weekly market calls, so you can join our research team on the market views and updates for newly published reports every Monday at 11 a.m. Or if you want to learn more about TA, like how to spot entries or exits, right, then this is for you. So our technical analyst, Zane, will do a TA on live counters every Monday night at 8 p.m. And at Phillip Capital, we are constantly providing educational resources for our investors. So you can actually check out our upcoming seminars and webinars by scanning this QR code here, or you can also visit our website at phillip.com.my to check out the schedules. So we often invite speakers from industries to give their market updates and insights. So it's actually a good learning opportunities, I would say. So do join our events. We have online account opening, so you can open your accounts for future stock and CFD with ease and convenience, because you can just do it online and in the comfort of your own home. So if you do want to open an account with us, you can just take a screenshot or scan the QR code right here, and it will take you directly to the online application. Okay, so now onto our trading platform. So the platform we use for futures is called Nova. It's actually a very user-friendly platform, so we also have mobile apps for iOS and Android devices for those who like to trade on the go. Our platform is actually equipped with a wide range of technical indicators, market depth trading tool, and you can access to both local and foreign products. We also have live market news. And if you have any questions, we have a Nova AI trading assistant always ready to assist you. So if you're not our client yet and you want to try our platform to see the interface, we also have a demo account for you to try out. And you can scan the QR code there to try out for our demo account. Okay, so for live charts, our live charts are powered by TradingView, where you can trade local and foreign products in one account. And we offered 15 global exchanges like SGX, HKEX, JPX, and we also offer 24 hours broking and execution support. So you can sign up for the demo account. And for stocks, this is our platform. The platform we use is called Poems. Our platform offers all-in-one stock watch list, charting indicators, exchange top 30 movers, powerful stock analytics, and market depth. So this platform is actually suitable for new and experienced investors. And if you're someone who is interested in trading, say, major US companies like Nvidia, Apple, Tesla, or Microsoft, now is actually a good time to take this opportunity, as we're offering a highly competitive rate of just 0.02% or minimum $3.99 for US shares and ETFs only. So on top of that, you get free access to live US market data. And there's also no platform and custody fees. So we're also having weekly market calls, as I mentioned earlier, which perhaps can give you some insights and updates on the key opportunities. Okay, so moving on to promotion. The first promotion we're offering is Drive Your BMD Trades Further with Phillip. If you're someone who is trading or interested in trading local futures like FCPO or FKLI, then this is perfect for you. So for our new clients, you're able to receive 50 ringgit trading credit if you open a futures account with us and execute at least one trade. And if you're already trading with us, you can actually stand a chance to win amazing prizes like the Produam IV, 10,000 trading credit, iPhone, Samsung TV, iPad, and more, which will be selected to a lucky draw in April. So this promotion is ending next month. We still have one more month left to join the campaign. And if you're interested to know more, you can take a screenshot or scan the QR code here. Okay, so moving on, the next campaign is the SGX Index Futures, whereby you can trade SG, China, Taiwan, Japan, Vietnam, and Indonesia index futures under SGX exchange from as low as $1.88, which is a very competitive rate. And these rates will be applied automatically if you trade any of the selected products. So this promotion will end on 30th June. So you can also scan the QR code, or you can take a screenshot if you're interested to know more. Okay, so our final promotion will be the mini FKRI Future Special promotion, whereby we're offering just RM2.99 commission per lot if you're trading FKRM, which is the mini FKRI that Bursa just launched at the end of last month. So aside from that, there's also a retail trading challenge where if you're ranked among the top 15 traders, you can win cash prizes up to 8,888 ringgit. And this promotion is actually only for a limited time, which is until 31st July. So if you're interested in trading FKLM, now is actually the perfect time to start. So you can also scan this QR code or take a screenshot to check out more if you like. Okay, before we dive into our topic tonight, let me introduce you to our speaker, David, who is the managing partner at Xmodus Trading Group PLT, which is a training and consultancy firm that offers bespoke financial market education and service to both individual and corporate clients. So David has over 25 years of experience in this industry. Before starting his own consultancy, David held leadership position in futures brokering division of major investment banks in Malaysia. So we're very honored to have him on board with us tonight. So do seize the opportunity to ask him any questions if you have regarding about gold by dropping your questions in the comments box later, and we will address them at the Q&A session. So let us welcome David. And David, I think I'll pass the screen to you now.
Thank you very much, Ivy, and thank you for that very fantastic introduction. Just let me quickly share my screen. Okay, I hope everybody's seeing that. Right, let's go here. All right. Okay, if everybody's seeing that, that's good. All right. All right. Okay. Now, welcome everybody to today's evening's webinar. Sorry for a bit of the delay. There was some jam in the airways. But well, we're back and we are live, and a very good Kong Si Fa Chai to all our Chinese listeners, and of course to those Muslim listeners and audience. Selamat berbuka puasa. And thank you for joining and taking time to talk about this very interesting topic that we are going to venture into today. And it has been actually the last couple of days. It's been during the Chinese New Year holidays, a lot of people are bringing up this topic about gold. So gold is really a very, very hot topic during the last couple of weeks when I was back in my hometown. And the pertinent question is this: the gold has attracted a lot of attention the last 1 year, right? So now with the big retracement, a big drop in prices in January. So the question now is, should I be getting in at this current moment? So this is the big question that we will try to explore, and I'll give you a lot of information on how you can decide for yourself whether this is the time to go in or this is not the time to go in. All right. So just hold on a second. Let me just send this. All right. So okay. So gold, okay. My profile, Ivy's done that already. This a little bit update after Chinese New Year, getting a bit older, so it's over 30 years already in the business. Yeah. Anyway, okay. So what are we going to cover this evening? Okay. Very interestingly, we have 6 sections here, and remember, at the end of the session we have a Q&A. So please feel free to ask any questions concerning the topic that we're going to talk about. Feel free to ask any questions. I'll be very, very happy to take them at the end of the presentation, right? So today what we're going to cover is basically, in the first section, we'll go through a bit of a history, not too long, just a year back in 2025, and what has happened in the last 2 months. Gold's historic journey. Actually, we are currently sitting in history, right? We in fact, this year 2026 is going to be very interesting. I think a lot of historical new things will happen, okay, and we are part of it, okay. So we will talk about gold's historic journey and talk about the 2026 crash, what happened, okay. And it's very important as well to understand what are the factors that took gold, the bullish run on gold, what are the factors that have actually driven the prices upwards? Okay, and what are the factors in that short few days where gold actually in 2-3 days dropped 1,000 over US dollars per ounce? Okay, now in understanding that, then you will get a better picture of whether in the future or in the next 6 months, okay, on the coming 3 months, whether the same factors or the drivers that actually boosted the gold's rise toward the historic all-time high, whether they are present or not. Okay, so this is very important in terms of learning through what has happened and the factors. And I will quite deeply dive into those key drivers so that you'll be able to have a grasp and see whether these conditions are what do you call that, are present for another what do you call that, a bull run, okay, in the next 6 months or 1 year. Right, so that's under section 2, where we explore the macro environment, the key market drivers for gold, right? And we'll go a bit into some slightly technical stuff, talking about gold supply and demand. Okay, not too heavy, but just give you an understanding where are the demand for gold and where the supply of gold actually come from into the market, right? And then we'll jump into section 4. It's one of my favorite section, where we look at which part of the market is the bull run now. Okay, so if let's say we assume that the bull is still there, which part of the market has the bull finished its job and now is the bear's turn? Okay, so we have to answer this question, whether the same bullish fundamentals is reflected in the technical charts as well. All right, and then we'll put up some scenarios from the fundamentals and from the technicals and look at what are the potential trading scenarios. Okay, what are the outlook like in terms of what are the odds like, in terms of the conditions. And lastly, of course, talk a bit about the products that you can use to actually make your ideas actionable, right? Okay, so let's move on. Now, before we actually go into it, it's important to have this disclaimer. Okay, so already Ivy has covered some of those. Please talk to your very able Philip Capital futures brokers or your remisers, that if you have any ideas that you want to see tonight that's interesting to you and you want to execute it, talk to your professionals in Philip Capital, and they'll be more than happy to execute those ideas that we explore. Right, so let's talk about gold historic journey, right? And before we get into 2026, of course, you look at a quick look back at 2025, and it's basically a year of precious metals. Okay, right up here in this chart, you can see is actually I put up 4 different metals, okay, which had a fantastic run in 2025. Of course, including gold. Gold is the one in red. Okay, you see the red one. The one in silver, okay, silver had a tremendous run as well, okay, even did better in percentage terms versus gold, okay, which is in green, right? And then we have platinum, okay, platinum is in orange, also amazing run. We have palladium, okay, palladium is in purple, okay, and lastly, to compare it with the S&P 500 futures, right? So in terms of year-end returns, gold returned 80%, which is a strongest annual gain since 1979. Okay, this is a very, very strong run. Okay, and the run is not only in 2025. In fact, before 2025, gold already started to move. Okay, the bullish momentum already started to move. Okay, but this is in the year of 2025, it did a fantastic 80% return, okay, at the end of the year. Okay, of course, silver did a very amazing 230%, platinum 184, 113. Okay, if you'd like to talk about silver and other metals, we can do another session. We'll sit down with Philip and get another session up and talk about that. Those are the wilder rides. Those are the wilder horses. Okay, so in terms of the beta or the time of volatility, I think out of these so many metals, actually, I still prefer to be looking at gold. Okay, so that's 2025 for you. And of course, in 2026, there was this huge run up in January, right? Right over on the right side, you can see the huge spike up. Okay, in 2026, was trading actually around the 4,003 levels, and then shot up to an all-time high of 5,626. Okay, so you can see basically tracking the historic price journey, right? In 2025, started the year around the 3,000 level, okay, and ended the year around the 4,000 levels, okay. and then shot up to the all-time high. Okay, and basically there were a few major drivers. Okay, as you can see here, I won't talk about this at this moment. I'll just go in when we talk about the factors. Okay, but the last couple of weeks that we really did a parabolic move was basically because of geopolitics, and this is something that you really have to keep in mind. Geopolitics plays an extremely big role in terms of gold prices. Okay, and there's a very big underlying reasons which we will talk about as we go on today, right? So you're talking about the Iran, US-Iran tensions. You are talking about the President Trump talking about the Greenland. Okay, talking about what do you call that? Putting tariffs on the EU because of their resistance to his acquisition of Greenland. Okay, and all this basically plays up into a perfect storm. Okay, where gold actually made this parabolic rise to 5626, right? So what about January 29, that day? Okay, what were the stories playing behind it when gold hit the all-time high, or the ATH? Okay, what fueled the breakout? Okay, so gold, basically these are the factors, and we want to remember. Okay, look at these factors and want to remember whether these factors are going to play out over the next couple of months. Okay, the first one we spoke about is the Iran-US geopolitical flashpoint. Okay, and what that does is people get nervous, people get fearful about markets, right? And when people get fearful about markets, any risky situation, a lot of the natural what do you call that way where they put their money will be in safe haven assets. Okay, and gold, of course, is one of the safe haven assets that traditionally has been that asset that the money managers, or those with funds who want to put their money there, right? So this is where the risk off sentiment actually swept through the whole market, right? And basically just took gold right up to the high. Okay, 595 ounce, depending on what is your reference. Of course, in the CME is 5626. Okay, it's around the 5,600 levels. That's where it really broke up and hit the high, right? Now, other factors were in play as well. Okay, those of you who are very happy in terms of the Malaysian ringgit performance, basically because the US dollar was trading at multi-year lows, right? So the dollar actually weakness actually makes gold cheap for global buyers. Okay, so it basically fuels the demand as well. Okay, and a lot of momentum buying and a lot of short covering. A lot of people couldn't believe, wow, gold at 5,000. They thought, hey, that's a very difficult resistance or very difficult price point to break through, right? But it really sliced through 5,000 like a hot knife on butter, right? So it sliced through that, and a lot of people had to cover their short. Okay, a lot of traders probably think at 5,000, let me do short. So this is a good label to do some heavy selling. Okay, but it basically sliced through it. Okay, and that short covering and the scrambling, okay, basically caused this parabolic move. Okay, and gold basically gained $1,300 in just 3 weeks of January, right? The other thing was fueled by all these as well. You had institutional players chasing the markets as well, right? ETF inflows, okay, these are exchange traded funds in the US especially. They were chasing the market as well, okay, because of such a huge, nice performance. They were getting into gold as well, okay. So inflows were at extreme levels, and in the CME COMEX Gold, okay, open interests were at really multi-year highs, okay. In fact, at the exchange in CME, because of the volatility, CME had to, change the policy on margins, okay, so to be able to manage the risk of that movement, right? So that particular move took gold above 5,000, first time in history, okay, on the way to its peak to 5,006. Okay, so those are the things that happen, okay, and those are the things that could again come in the next couple of months. So you need to watch those stuff, right? So on January, okay, 29th, 30th, those are fateful days, okay, those who chase it until the end of that okay, what we saw was his huge correction, okay, in the span of from the peak, okay, to right at the the bottom of that correction at 4,400. 3 days of very heavy selling, especially on January the 30th, the last day of the trading day of the month. We saw what would we call, or what the experts or analysts would say, a very big speculative unwind, okay, because it just went crazy. And anytime you see a chart, whatever, whether it's a stock, whether it's a commodity, whether it's gold or equities, when it moves right in almost like a straight line upwards, okay, you are always will see this huge wind down, okay, a mass unwind of leverage positions, because people, traders, were just taking a lot of leverage positions, speculative positions, okay. And this particular unwind is very different from what we call a fundamental reversal. Okay, what is a fundamental reversal? A fundamental reversal, that means those factors that drove the prices of gold upwards, okay, over the last 1 year in 2025, okay, those are the factors that are reversed. So the question is, were these fundamentals reversed? Okay, this is something that we'll explore a bit deeper. Okay, so the key question is, of course, is the bull run over? All right, so that's the key question tonight. Is the bull run over? Right? Yeah. So the thing is this: the answer is perhaps not, okay, because this is not a fundamental reversal, okay. The structural drivers remain fully intact, okay, and we'll go in and look at the structural drivers. What are those? Okay, so this pullback, okay, okay, we will look at technicals as well, so to time it so that you don't want to get in, or you don't want to re-enter the market, or do the wrong thing, or position yourself in the wrong trend. Okay, that one is the timing on the technicals. But this pullback, okay, may be an opportunity, okay, for those investors, okay, who missed the initial breakout, to get into the action again. Okay, so in terms of what the analysts say, and what the experts look at this January sell-off, they feel that it's basically that speculative thing that really took it off. I know it went a bit crazy, right? And now it's basically moving back to the equilibrium following the fundamentals. All right, so let's move on. So that was what happened, okay, historically over 2025 and in January. Now let's look at the macro environment and what are the key market drivers, okay? Now, in terms of looking at 2025, the main structural difference is this: central bank has been buying, okay, and it has been buying, okay, across since 2022, okay. So those who have followed the supply and demand of gold, okay, those who follow gold, that you know that in 2022 central banks have been buying. In fact, central banks over in 2023 and 2024 actually have bought more tons, okay, over 1,000 plus tons per year compared to 2025. Okay, 25 is also not little, but still a bit lower, okay, than the last since 2023, 22, and 2024. Okay, so this is a structural change, okay, and that's a very big reason why central banks are loading up on gold. Okay, the first most important thing is the diversification from USD denominated reserves. Okay, US dollar denominated reserves. So central banks are buying gold as reserves. Okay, and this is what we call geopolitical insurance. They're buying insurance. They're losing faith. They're losing faith in US dollar denominated reserves. Okay, so they are diversifying. Okay, they don't want to put so much on US dollar reserves. Okay, I want to put some into gold, right? So you can see right over here, this is the latest central bank gold statistics in 2025 issued by World Gold Council. You can see the buying, okay, the buying, which is the gross purchases. Okay, the net purchase is this line. Okay, this line right over here, the dark colored gray line. Okay, you can see in since 24, it's a huge jump here. Okay, so in 2025, central banks accounted for almost 17% of the total gold demand. Okay, compared to in the years 10 years before 2015 to 2019, only 12%. Okay, so that's a huge amount, 17% in 2025, and it was even more in 2024 and 2023, right? It was when we first started in the first quarter of 2025, central banks actually bought 244 tons in highest first quarter since 2016, right? This was reported in World Gold Council. Okay, and who are these buyers? Who are these big buyers? Okay, so you want to know? It's number one. It's China. Okay, Turkey. Okay, Poland. Poland has been buying a lot. Okay, you must ask the Polish guys why are they buying so much. India, Czech Republic. These are the top 5 buyers. Okay, leading buyers in terms of last couple of years. Okay, and one thing that you need to note is very interesting report came out in Goldman Sachs. Okay, you can refer that link that I put down there. Is emerging markets are actually behind the trend. The emerging market central banks are behind the curve. Well, so they're saying that these emerging market central banks remain significantly underweight. That means they are not buying yet the US gold as their reserves. Okay, what if they suddenly wake up and says, now I really need to buy some geopolitical insurance as well. Let me go and buy some gold. And this is going to be like, the wind that again pushes up the gold prices. Okay, so these emerging market central banks have not been really participating. Okay, they've not been really buying. Okay, so this is another perhaps a bullish factor that can give extra push in terms of this sector. Okay, central banks. Okay, and now you will see why. Okay, this is the big reason. Okay, the de-dollarization and the USD decline. This is a structural shift in global reserve architecture. Okay, we spoke about the central banks prior. Okay, and one of the main reasons is they saw in 2022. Okay, Russian sanctions due to the Russian-Ukraine war. The US dollar was actually used as a weapon. Okay, and this basically accelerated the global all the guys globally. This US dollar reserve, if I have all my reserves in US dollar, and if the president of the US doesn't really like me or don't like the policies I do, they could do what they did to Russia. Okay, weaponize the US dollar and freeze all the US assets. Okay, so this is the risk, this is the fear. Okay, and this basically also caused the dollar weakness. Okay, we said this now, making gold cheaper and more attractive. Okay, so boosting basically the non-US demand. Okay, why? Because gold is neutral. Okay, gold is historically been neutral. Okay, there's no sovereign, or there's no one country controlling. It's historically, of course, trusted. So many years already. Okay, it cannot be controlled by any one nation. Okay, so you also remember that a lot of gold, in vaults of the US, a lot of these global central banks are also trying to move it back to their own shores. Okay, and this also because of Trump's talk about the Federal Reserve chairman that is going to be replaced. Of course, he's already nominated Kevin Walsh for that role, right? And this has created a lot of uncertainty. Okay, U.S. Federal Reserve independence. Okay, so is the U.S. Fed chairman going to be controlled by the U.S. president or Trump? Okay, so this basically, people get more fearful. Okay, of course, Trump doesn't help. He has his tariffs, he has his trade wars. Okay, we are, I think, in 2026 just beginning to see the volatility. And if you think that is already volatility, I think there's a lot more volatility coming around the corner. Right. So all this basically boosts the safe haven demand. Okay, and this is a long-term structural trend. Okay, once you start the trend, okay, once you de-dollarize, okay, although everybody's of course speculating whether USB not be that the reserve currency. This may not happen immediately, but the trend has started. Okay, the de-dollarization trend has started, and this is a long-term structural trend. Okay, and this is something that will, of course, benefit gold, right? Okay, talking about Federal Reserve and interest rates, of course, the rate cycle. Okay, interest rates in the US is a big impact on gold prices. Okay, so in terms of currently, the Fed, of course, in pause mode. Okay, for the January meeting, they are not raising rates. The last time they raised rates was a quarter percent in December. So now they're pausing, of course, rethinking whether where is US employment going, how is the labor market doing, how is the US economy doing, right? So looking at this, and how is inflation playing out in the US. And this is a very, very important thing. But historically, the pattern is when you see the Fed pause, okay, this has consistently helped gold, okay. This has consistently coincided, okay, so ngam, with a strong gold performance, okay. So this fits into it, okay. So this because when rates go down, right, rate goes down, then it makes gold more attractive, okay. You saw the cutting cycle, okay, in basically Fed was raising rates in 2023 and began cutting in late of 24 until end of last year in 2025, right? So in 2026, the expectations is there's probably going to be 2 to 3 additional Fed cuts, okay? If growth will slow, okay, if the U.S. employment market is going to be weak, okay, and all this will be supportive of gold's basically what you call the zero coupon profile. Is gold doesn't give you an interest, it doesn't give you a dividend, right? It doesn't give you a yield by holding gold, okay. But as used in other types of financial products or interest rate comes down, then it makes it more attractive in terms of gold. Okay, so of course, real rates against inflation is a very important thing, right? Key variable in terms of gold. If real rates are going to come down, okay, that means not really getting a return after deducting the inflation, then gold is going to be very, very attractive. If real rates were to drop, gold will outperform. This is the historical pattern of gold. Okay, and that's basically because of the bond market uncertainty, the US fiscal deficit. These are all basically making the treasury unappealing compared to gold, right? So this is very important to look at. And if we look at the federal CME Fed Watch, and this is a great tool to look at the what is the expectations of traders in terms of interest rates. Okay, so basically the traders consensus. Okay, now the current rate you can see right over here circle, it's the target rate is 350 375. Okay, so in June meeting on the 17th of June and 29th of July, there is a higher expectations that the Fed will cut some rates. Okay, so from the 350 375, possibility of looking at perhaps a quarter point reduction across from June and July meetings. Okay, the rest of the meetings in September, October, and December still not sure yet. Okay, but odds are slightly higher right at the June and July meetings for a cut. Okay, so that's what currently the traders. Now these percentages actually does change as every single day as the treasuries are traded or the short-term notes are traded. So you can go to the CME website, go to CME Fed Watch tool, okay, CME Fed Watch tool, and see what is the consensus, okay, of the traders. So this is a very helpful tool to see what the Federal Reserve is going to do. Right, so let's jump into inflation, tariffs, currency, debasement. These are the things that our dear President of the US, Trump, has kind of initiated a lot of these actions, and the impact is coming in. Okay, basically, when this three things happen, inflation, tariffs, currency debasement, we talked about this now a bit. The gold's role in terms of inflation hedge and as a reserve alternative is enhanced. Okay, that's why central banks are getting into the action. Okay, and one of the things is this: as the Fed tried to what do you call that? Cut the rates. Okay, and seeing that they actually had a mission of looking at the 2% inflation rate in the US. Okay, but this 2% has been very elusive. Okay, after cutting since the end of 2024, they still can't able to move down, although it has moved down from the height. Okay, but it still can't get to the target. Okay, and the last numbers which you will see later in December was at 3%, right? So this is getting a bit tough to get inflation to go down, okay? And one of the reasons, of course, that has been given is the tariffs as what we call a structural price pressure, okay? Because tariff is a tax, right? So cost is increased. So there is a structural price pressure that always keep prices on the higher side, okay? And basically plays into gold's dual role of as an anti-inflation hedge and a debasement, okay? Debasement is what basically the currency can't buy so much in terms of what is the purchasing power, okay? So a debasement of the currency, basically the currency that you're holding cannot buy as much as it did previously. right? So of course, in the US, in Europe, and in Japan, there's this huge expansion of government debt in terms of wanting to inject some activity into the economy. There's a lot of what do you call that, government debt, and this again raises the long-term risk of debasement. Okay, and if the government can't or unable to service or have trouble servicing the debt, then they resort to what they usually do, which is what we call printing money. Okay, so even though inflation actually showed slowed and declined from 2022's peak, okay, gold continued to rise. Why? If inflation is going down, there shouldn't be a fear, right? That's the, I mean, gold is supposed to, if inflation is high, then gold is a great hedge, right? But with inflation going down slowly, why is gold still continuing rising? Basically, not only because of inflation, there are larger pictures here, okay, which is the signal of a what we call a structural demand change, okay, which we saw this now as the the central governments went into and getting gold as their reserves. All right, so this is the core PC. This is the personal consumption expenditure. This is the number that the Federal Reserve, this favorite number to look at in terms of making decisions in terms of the interest rates. Okay, so if you talk about inflation, they want to look at this number. And the latest number that came out in December, basically the figures went up to 3%. Okay, up from 2.8% in the previous number release. Okay, and this was actually above market expectations of 2.9%. Okay, so you can see the graph right over here is creeping up. Inflation is creeping up. Okay, and this is what we call a hotter print, right? It basically reflects a very persistent services inflation. There's a lot of cost in terms of services. Okay, and also possibly because of the initial pass-through of the new trade tariffs, okay, which is basically now reflecting in prices. Okay, so this somewhat the analysts call it complicated, noisy picture, right? Basically, in March, the March rate cut is not going to happen, right? I mean, we saw in the Fed CME Fed Watch tool that it's probably going to happen only in June and July meeting. Right, so this is the thing that you want to watch every month. It comes out. I think it's the last Friday of every month. Look at it. See where's the trend. Okay, this is something you want to follow as well. U.S. core PC annual change and the numbers is a very important determinant in decisions by the Federal Reserve. Now we move on and talk about this very huge jump in buying. Okay, ETFs and institution investment flows. Okay, now we can see the graph right over here. You have a box of 2024 and you have a box of 2025. You see the height of these bars, right? There's a very marked difference. Okay, Western capital, especially US ETFs and funds, return aggressively to gold after many years of staying out. See, 2024 was so kind of like slow in terms of regional ETF flows. Okay, and then you saw this huge buy up, and the last figure in January was the highest. Okay, as of 30, because this figure is as of 31st of January. Okay, so this is a huge buy. Okay, the gold ETFs basically attracted 19 billion US dollars, the strongest month in historical record. Okay, yeah, so you could see a huge participation. As this last bar here, what is interesting about this last bar here is the pink portion. Okay, this is the full bar, and then it's decomposed in the various North America, still a very big buyer, Europe, okay, and then Asia in January. Asia, you saw this is the largest part, okay, actually came in and participated in ETF flows as well. Right, so this is one of the biggest factor also, besides the big support from central banks. ETF institutional flows into gold funds have been coming in very strongly, and in COMEX as well, in CME futures contracts, you could see that a lot of people were actually strategically holding physical holdings in gold as well, versus the speculative futures. Okay, traders tend to be more speculative in terms of trading the futures, but you could see more and more strategic holdings in the derivatives as well. Okay, so this is very interesting in terms of funds and investments into gold. Okay, this has been a huge spike. All right, and then in terms of coin demand and global bar, who buys that the most? Asian, okay, Asian and retail investor, Asia Pacific basically drives it. Global bar and coin demand, 67% by Asia Pacific, okay, China, okay, India, Japan, okay, and the fact about this buyers in terms of they keep, okay, they buy the gold jewelry, they buy the gold bar, and they keep, okay, all these coins and gold bar, they keep for a long time, right? Yeah, you will heard stories from your grandmother. Hey, my gold used to be this price, and now it's like this price, right? So they hold for many years, right? So APAC retail demand is very sticky. Consumers don't sell, and right? Despite high prices, they expect even higher prices. Okay, because there's no real economic distress unless they are forced to sell, right? You need to fund something, right? Yeah. Currently, there's no economic distress in Asia Pacific. Okay, and basically this provides a very strong price floor. Okay, what does it mean? It means if prices come down, okay, these guys will go in and buy again. Okay, so Asia Pacific, interestingly, in terms of global buy and coin demand, they are the biggest buyers. Okay, and you could see the trend in 2025 as well, right? It's highest since 2014. Okay, so over the last 11 years, 2025 have been very high compared to the last 10 years. Okay, so now this is the thing that you really need to look at. Okay, this is what we call wild cards. Okay, what do wild cards mean? That means this card can be played anytime. Okay, yeah, if you were playing cards, wild cards are things that can suddenly happen. Okay, and this is the key risk that's driving safe haven gold demand. Okay, so what's happening now in US, Iran? Okay, this is something that you really have to watch very closely every single day in your news feeds. Okay, follow this. Okay, especially if you're looking at gold. It does not only have impact on gold, of course, it has impact on equity markets as well. But this big geopolitical wild card, okay, and it's not only happening in the US with Iran, it's happening in Russia, Ukraine, right? You've seen a lot of activity and attacks in Russia, Ukraine, attacking each other, okay? And the Middle East, not only in terms of Iran, of course, the biggest escalation it will be in Iran if something happens, okay? We hope for peace, okay? But de-escalation actually doesn't work for gold, okay? Okay, this is something a bit sad, right? So if something really big happens and geopolitical tensions and risks really go up, okay, this is going to cause not only gold to spike, okay, it's going to cause oil to spike. And when oil goes up, okay, what happens if its oil is at $100 a barrel, 120 US dollars a barrel? Basically, inflation around the world and especially in the US as well will spike. Okay, and when that spikes, okay, that's gonna really have a deep impact in terms of not only in the US, okay, but the global economy, right? So every geopolitical shock that has happened since 2022 has been a gold price catalyst. Right, so watch this very closely, okay, because this is a wild card. It can happen anytime, okay, and when you least expect it, okay, especially on weekends, somehow a lot of things happen during the weekend. So if you you know watch out for those weekends, okay, and that's why gold, very interestingly, always makes its new price highs and lows of months or weeks during Monday, because everything happened in the weekend and then he has to react on Monday. Right, so watch this geopolitical wildcard, extremely important factor and driver to look at. Right, so we've covered all those drivers, and that's the environment that we're currently operating in terms of gold. So think about it over the next couple of months. Are these factors still in play? Right, so that's why we say that this current correction, although it's a very deep one, okay, it hasn't really changed all the fundamentals that you saw just now. Okay, federal interest rates, blah blah blah, all those things haven't really changed. Okay, now we jump into a bit of a few slides on the gold supply fundamentals. I don't want to really bore you with these statistics, but just to give you a feeling, if you trade gold, you need to know a bit about this. Okay, this is gold supply. Okay, and in 2025, where was the biggest action? Okay, this is the biggest action. Basically, 84% year-on-year change happened at the investment level. That's where the explosion in ETFs, okay, where all the US, especially US ETFs and investment funds came into buying the gold funds. Okay, now in terms of total global demand in gold, it's only 1% up. Okay, it's 5,000 tons for 2025. Okay, but it's interesting to look at the sectors. Okay, and that basically in terms of total changes, 43% of the total, okay, of the demand in gold for last year came from investment. Okay, and this was a very big change, a year-on-year change of 84. Okay, so this includes not only ETFs but also bars and coins. So where you saw Asia Pacific basically dominating that space. Right, technology had its although it's increasingly been used, okay, but you see not much of gold difference. Okay, jewelry consumption, you saw a drop actually, and there's a reason why. We'll talk about that. Central banks were active, but less active than 2024. You could see in 2024 they bought over 1,000 tons of gold. Okay, and in 2025 they were a bit less. Okay, but in terms of value, it's more. Okay, because of the gold price has gone up. Right? So let's just look a bit of jewelry demand. Okay, no matter what you say, central bank, you say ETF demand and all that, still the largest demand category is jewelry. Can you believe that? Yeah, gold mainly is jewelry. So 31% of all the total what do you call it, gold demand in 2025 is actually jewelry. Okay, but the price of jewelry is this: as jewelry is something that if it gets too expensive, people will hold back, right? Yeah, it's expensive when you buy jewelry, right? It's a kind of like thought as a luxury item, right? But then, it's still the largest driver, in terms of demand. Okay, so something that you keep in mind, although we get so excited about investments, central buying. Okay, but jewelry is still the largest demand overall. Okay, but it's been affected a lot because prices go up over 5,000. So as prices go up, of course, people will hold back in terms of purchasing jewelry, right? So volume in terms of demand will come down, right? Now in technology is a steady growth. Okay, so this technology, although it's only 6% in terms of demand, okay, compared to things like metals like copper. Copper is an industrial metal, right? So the usage of gold as an industrial metal, especially for electronics, okay, that's where gold has traditionally and now even moving forward, be more and more gold being used in terms of that, right? So the AI infrastructure in terms of semiconductor components basically will increase. Okay, but this is very modest. Okay, compared to the other sectors. Okay, it's not a really prime moving market moving factor. Okay, compared to other industrial metals like copper. Right. So what about supply? Okay, where does supply come from? Of course, the main supply comes from mine production. Okay, and overall in 2025, coincidentally, the total gold supply also increased by 1%. Okay, about 5,002 tons in 2025. So basically match lah. Okay, a balance with demand. Okay, but where it's basically comes, the biggest production is coming from mine. We have an increase in recycling of gold. Okay, from what do you call that, scrap parts. Okay, where in terms of electronics and all that, they can recycle. That is also these two are the biggest. Okay, mine production is still the biggest. Right. So in terms of looking at gold demand and supply, and 2025 basically they balance out. Okay, it's only overweight in certain sectors. Okay, and this we're talking about tonnage. We're not talking about the notional value of gold. Okay, these are all in terms of tonnage. Right. So this just give you a glance of gold supply and demand. Okay, so now let's move on to talk about where is the prices in terms of the technical. Okay, and this is very interesting. I want to show you this. Now, I'm analyzing it from the viewpoint of the Elliott wave. Okay, so those of you who are in technical and what do you call that, familiar with Elliott wave theory, you understand that in terms of bull run. Okay, a bull run has 5 waves. Okay, so that we have a first up wave followed by a second a consolidation wave followed by a wave 3. Okay, so what you saw, that huge move from mid of 2024 right up to the first month of 2026, that's what we call wave 3. Okay, because wave 3 is the most bullish and the most powerful wave. Okay, then it's followed by a consolidation wave. Okay, so the question now is this move now a consolidation wave. Okay, so it looks likely to be a consolidation wave. Okay, but because the markets have moved so high, so the consolidation may be deeper than what we've seen. Okay, so in terms of the 4,400 levels, okay, unless other fundamentals override, that means wildcards override, then there's a possibility in terms of technical consolidation to see prices move back around the 4,000 levels. Okay, that is a what you call the expected retracement or correction area if now the gold is going to go in a wave 4 correction. Okay, now what is after the wave 4 correction? After wave 4 correction, then you have this wave 5. Wave 5 is the last wave of the bull, okay, where it will even take out, it will take out the 5626. Okay, so 5626 is not your ultimate goal in terms of gold, right? There is another move coming, okay, but it will have to take a bit of breather. It needs to consolidate itself. Okay, after this really rapid and crazy move upwards, it needs to take a break. Okay, this bull really needs to take a break. Okay, so it's possible to see a consolidation come out down to close to the 4,000 level. Okay, and this is where a lot of technical traders may want, okay, to position themselves for that wave, the wave 5, right? Okay, what are they waiting for in wave 4? They're waiting coming down to the target zone. Okay, unless fundamentals take it all upwards faster than we think. Okay, that is where they want to position themselves for the start of the wave 5. Okay, which is the last bullish move, and this last bullish move will take out the 5,006 level. Okay, so that's what it means in terms of the Elliott wave chart. Okay, there's still another bullish wave coming, right? Okay. Okay, so what about the daily chart? Okay, that was the weekly chart. So the weekly chart gives you a view about something like a 4 to 6 months ahead, what's happening, right? Now, what does the daily chart suggest? Okay, currently prices are actually moving up around the 5,002 levels. Okay, this chart was updated was that this is February 24th. Okay, basically it's come off a bit. Okay, so the question now for Elliott wave chart. Okay, now in terms of Elliott wave chart, the daily chart is basically says that this particular bullish wave, the fifth wave is complete. That means it's done the full 5 waves on the bullish sequence. Now it's going to go into what we call ABC correction. Okay, so ABC correction, now we have to watch the very important part. An ABC correction basically has 3 waves. Okay, you have A wave, okay, and then a B wave. Now this B wave is there where a lot of bulls will be trapped. Okay, if you feel that now is the time to get in, okay, it may not necessarily be. Okay, so if this is the B sequence, then there's a possibility another sequence downwards, and this sequence will reach for that 4,000. Okay, which coincide with the weekly chart. All right, so basically they are in sync. If those are in play, the only thing that can happen, okay, will overturn this chart totally, is a geopolitical situation, what we call the wildcard. All right, so there's a possibility of its consolidating. All right, this may not be the best wave to get in. Okay, the best position is still looking not only on the weekly chart, okay, but on this. Okay, but that is saying that if unless some geopolitical wildcards come in. Right, so this is the technical view in terms of the Elliott wave. There's some possible consolidation carry on. Okay, and because the previous waves was a very fast, the second wave, if you go up here, the second wave was a very simple wave down. So the wave 4 may be a bit more complicated. It may take a couple of months before taking the next upsurge on the 5th wave. Okay, so those are the readings from the wave, the technical chart. Okay, now I'm going to go into the 6-month outlook and look at what we are looking at. So at the weekly chart, basically we say the wave 3 surge completed, wave 4 correction now in play. Okay, where are the target zones? Right, the target zone is the 4,000, 4,003 level. Okay, if they reaches that target zone, then that will be a good technical area where the wave 5 will resume. Right, so key support is very important at 4,003. This is actually the December 2025 lows, which we look at it technically as a support. Okay, the current intermediate support, because now it's 5,200 levels, right, is at 4,850. Right, the key resistance at 5,003. Okay, so the bullish scenario, of course, if it takes out the 5,004 levels, okay, then it's going to target the retest of the 5,006, and then you're talking about the 6,000 plus, you're talking about the 7,000. Okay, that is the wave 5 story. The 6,000, the 7,000 levels, those are the wave 5 story. Okay, but currently the odds are they will have to take a breather, right? There'll be, because this is possibly a wave 4. So in terms of potential scenarios, bull bear case, right? Let's talk about possible 6 months scenarios looking at technicals and the underlying fundamentals. The bull case, of course, prices will be around 5,004 to 6,000. Okay, the Iran conflict will escalate. Okay, there'll be accelerated Fed cuts. Okay, that will happen in say June, July. Okay, and USD breaks below the 95. This is the US dollar index. Okay, so if USD continue to be bearish, okay, then we'll see this 6 month this scenario on the bull case happening, right? But the base case, okay, basically there's a gradual grind higher. Basically, we're saying we'll consolidate, but we'll slowly grind up. Okay, there'll be 1 or 2 Fed cuts, okay, happening perhaps in June, July, right? The central bank and ETF will still have sustained their support, okay, for gold. And 5,000 is of course the key support, okay, which we're talking about that very important price point. Now the bear case is if there's major geopolitical de-escalation. Okay, it means everybody loves peace and everybody say, okay, let's be friends again. Okay, let's not fight. Okay, Iran makes friends with the US. The Israelites, ask for peace in the Gaza. But that case is that's called the bear case. Okay, so de-escalation peace is not really. So when everything is nice and peace, then gold will move down lower. Okay, and if the new Fed chairman, okay, Kevin Walsh becomes hawkish, right? He's known to be a hawk. Okay, that's why January 30th, when his nomination was announced, the market was spooked as well, right? We'll have to see what is his stance in terms of interest rates. Okay, and if US dollar were to follow with a hawkish pivot, okay, of course US dollar will rally. Okay, so that's the bear case. And why I inverted the pyramid opposite is because in terms of probabilities, the bull case is more probable because of the fundamental supports. Base case, okay, of course, that's the middle ground. And then the bear case may be the least likely. Okay, so basically, I think major geopolitical escalation is more likely than de-escalation. Right, so that's possible scenarios that we look at, and in order to take what I call that effect of those ideas, okay, you have a few products available by Philips that you can trade. You can trade the GC contract on CME. Now, this is a very big contract, 100 troy ounce, right? This is worth $500,000 US in terms of the notional value. Okay, so a lot of people trade the smaller contracts. Okay, a lot of people trade the micros, which is a 10 ounce contract. Okay, so you can buy, you can express your view whether it's bullish or you feel the markets are going to come down on the C wave of the ABC. Okay, so you can short as well. You can make money on the bear market as well, right? And there's another product which is the 1 ounce gold. This is the was launched last year. Okay, small, affordable 1 ounce. Okay, which is also not cheap. 1 ounce now is $5,000 of a notional value, but this is a very convenient size to trade. Okay, getting a lot of traction among the traders, both also in Malaysia and Asia Pacific as well. Okay, so there is of course another contract in Bursa Malaysia. Bursa Malaysia also has this FGLD contract. Okay, it's very interesting contract. It's called the Quanto. That means it trades on $1 movement of the gold price in ounce is equivalent to 40 ringgit. Okay, the multiplier is 40 ringgit. So every $1 move per ounce of gold is 40 ringgit move. Okay, so it's a multiple of 40 ringgit. So it follows the gold prices, of course, internationally in terms of ounces, but every single $1 move per ounce is 40 ringgit. Okay, so this is something that you may want to try as well. Okay, it's probably a bit cheaper, not really that cheap anymore in terms of margin, okay, because of volatility, but this is more home ground. If you like Bursa Malaysia derivative products, you have you want to trade in ringgit, it's settled in ringgit, right? Ringgit is strengthening, so maybe you will like this as well. Right, so these are the available products that we have on the Philips contract. Of course, Philips has a lot more different contracts they can trade. This is the popular ones that we that is traded in Malaysia. Now we're going to go into a Q&A. All right. So if you have any questions already, that'll be great. Okay, otherwise I'll just go into my live chart, and then we can take questions from there. I'm going to pass over to Ivy, and Ivy, we can take questions while I go into the live charts. Back to you, Ivy.
Yeah, sure. Thanks, David, for the very wonderful and insightful sharing. So I hope you guys learned as much as I did from his sharing. So we will go over with the Q&A section right now. So if you guys have any question, just feel free to drop them in the chat box, and we will go through them. So David, there's one question. Since you provided a potential scenario that the price will be around, but most likely will be around 5,400 to 6,000, do you think it will more likely happen on the first half of the year or the second half of the year?
Okay, hard to say. So it's a very, very much a call from Trump. How often or how possible that that potential escalation in Iran, US, or any other parts of the world. Some experts say that April is going to be a very critical part. So that's only 2 months more to go. So it's very likely in the second half or the beginning of the second half of this year that possible escalation will take place or start to take place, right? So it's still 2 months for the gold to consolidate. Okay, this is a daily chart. Ivy, is it showing for everyone, the chart?
Yeah, it's showing, David.
Okay, so you can see right here it's consolidating, right? So although it has this upwards thing, right? So timing in terms of what we saw just now was the weekly chart. Now, the weekly chart has basically, when I use a weekly chart, it basically projects out into next 3 to 6 months. So whatever plays out in the weekly chart, it's likely what you see in terms of what will happen in 3 to 6 months. Whereas in the daily chart, it's something that was going to happen within the month. Okay, so at this current moment, if you go back to the daily chart, okay, it's still slightly a bit bullish at this moment, but you can see momentum is coming down, right? So although this particular rise or resurrection from the lows at 4,004, the momentum is not really picking up as aggressively. Okay, so the buying, although there's some support, has not been very aggressive. Okay, how the players are going to react to a geopolitical situation is going to be the very main thing in terms of driving prices higher, right? So we already seen all the fundamentals, and all those big fundamentals don't change overnight unless we have something, things that are already going to surprise will be, okay, as I said, geopolitical, okay, Taiwan, China, I think that won't come so soon. Okay, so that's something probably next year. But if things start to heat up, okay, and things start to boil, no, and then gold is going to react. Okay, the rest of them like central bank buying and all that. The central bank, in fact, when prices come down, that's a great opportunity for them to, increase their reserves as well. Then they really don't chase the markets. ETFs as well, they are opportunistic, but they are a bit more sane. They're not like speculators, right? So there'll be this underlying support. Okay, so there is going to be a support, whether this one is a fourth wave or not. That, so the question is this: is this 4,004 the bottom of the fourth wave? Okay. Now, if it's a bottom of the fourth wave, then what you probably expect, the expectation is like this, right? So if this is the first initial part, okay, as a technical analyst, what we'll do is we'll take this particular point right over here, okay, and if this is the first initial thrust up, okay, then there'll be a second wave downwards. This retracement wave, okay, we'll probably take it to around the 4,007, 4,008 levels, okay. So if you feel that things are really heating up and it's coming to this point around the 4,008, this must be maybe a region you want to look at as well, okay. But all bets are off if it breaks the 4,008 level, then it's probably going to come and test the 4,004 level. And if it does come to the 4,004 level, then 4,000 is a more likely zone that prices will come in, right? So in terms of the 3 to 6 month thing, according to some models, okay, they expect escalation in month of May, month of April and May, right? So maybe over the next March or or in middle of April. Hopefully talks continue to move towards some sort of a negotiation. Okay, but expectations are volatility will come in April. I hope that answers the question, Ivy.
Yeah, thank you,
Any other
David.
questions?
Yeah, we have one more question here. Someone asking, is there any website or books you can recommend on regarding the Elliott wave theory?
Elliott wave theory. Elliott wave theory is something I would recommend you to read this book. Okay, let me see. I can type it up for you. Okay, hold on a second. Let me just, in terms of, okay, try this book by Bill Williams, my favorite teacher. Bill Williams, Trading Chaos. Okay, it's called Trading Chaos. In it, not only you see all these lines, all these lines, alligators are Bill Williams, but it's got a very succinct, a very section, a very understandable section on what do you call that, on Elliott wave. Okay, it makes Elliott wave a lot easier. Okay, now if you really go deep into Elliott wave, you go crazy, because the books on Elliott wave are very thick. Okay, so look for those simplified versions. Okay, the simplified versions are better. Okay, we don't want to get into counting even the microwaves and all that, right? So in terms of Elliott wave theory, basically what is the good traits in Elliott wave is the wave tree. We saw this, which is the wave tree. Okay, and then the wave 5 is another preferred one. The other one is the wave what do you call that, wave C. Okay, just hold on a second. I go back to the slides. Okay, go back to the slides. Let's hold on a second. This wave C that is a favorite among the traders. Okay, where's my slide? Just hold on a second. Let's see. Let me see if I can see my slides. Where's my slide? Never mind. Let me go to the chart. Share the screen. Okay. Need to get into another chart. Okay, let me see. Let me find it for you. Okay, this one. Okay, the computer will react a bit slower. There's a bit of lag on. Okay, all right. Okay, this one right here, right? Now, if this C, okay, now this is okay, which are the favorite waves to trade? Okay, in terms of daily chart, the third wave is the favorite. Okay, so a lot of traders don't really bother about wave 4. Wave 4 is very difficult to trade on. It's a sideways thing. Okay, but they look at wave 4 to find where it's the start of wave 5. Okay, because wave 5 is where you want to trade as well. Okay, and then the other trade is the A and B. The traders don't really like it. Okay, those who study Elliott wave, they don't like to trade the A wave and the B wave. Okay, what they like to do is see where is the B wave starting. Okay, so the question is this top around the 5,003 resistance level, is this the B wave top? Because they love to trade the C wave. The C wave is the most aggressive down wave. Okay, so this is where all the buyers, even at the B wave, all the guys that were bullish here from A to B, we also will say give up. Okay, and when give up, that's why the C is going to be very aggressive. Okay, so the another scenario is this in terms of the B. If it's find a B top already, and it's possible because it's a 3-wave up. Okay, it's possible that this is the B wave, and if this is a B wave, then there's possibility of another down wave to fall. So from here it's quite a height. If from 5,180 to 4,000 is $1,800 move. That's why traders love this move as well. So those of you who are, of course, you need to find an entry right over here in your technicals or whatever reading. Okay, of there's really escalation. But then the basic thing is this wildcard thing is always you need to react fast. Okay, so when you're trading on the short side currently, make sure your stops are there. Okay, don't get caught up by a wildcard. Right. So I hope that answers the question, Ivy.
Yeah, I did. Thank you, David. I think we overshoot
Right.
our time a little bit, so I think we
Sorry
will
about that.
end our, yeah, we have to end our Q&A session here. So thank you again to David for your informative sharing. So just let me share my slide for a moment.
Yep.
Okay, so after listening to David's sharing, if you're interested to kickstart your trading journey with us, you may take a screenshot or scan the QR code here to open an account with us. And for you guys who are keen to connect with us, you can find us on this platform. Just search for Phillip Capital Sendirian Berhad on our Facebook, YouTube, Telegram, LinkedIn, and TikTok. So we post a lot of updates regarding our events, promotion, market news, and updates. So be sure to follow us so you don't miss out on any of our updates. Now, we also do upload our recorded videos, as mentioned earlier, on our YouTube channel. So you make sure to check them out. And if you guys are interested, can join both our Telegram channel for stocks, futures, and CFD. You can also take a screenshot or scan the QR code to join. So lastly, this is our branch's contact for you to reach out depending on where your location is. You can visit our branch or contact the branch nearest to you. So you can take a screenshot as well if you want to. If you have any inquiries, just feel free to call us or drop us a message anytime. Okay, so with that, I think we have come to an end of our webinar. If we didn't manage to answer your questions, you can drop it in our email and we'll try to answer them. So really appreciate everyone for your time to join us tonight. And thank you once again, David, for your amazing sharing. And we hope
Thank you.
we hope to see you all again next time. Thank you and good night, everyone.
Good night.